CNBC TV 18, celebrating 15 years of leadership.
Our top story tonight, oil marketing companies smile on the consumer, but only just. Petrol and diesel prices cut by over 2 rupees a litre, but this comes only after the government hiked its fuel duty for the 4th time in 3 months to shore up its coffers.
Reliance Industries meet street estimates in the third quarter. Profits fell over 4% as expected, but gross refining margins lag estimates.
Wipro delivers in the third quarter. Revenues beat estimates, and the company expects a growth of between 1 to 3% in Q4. CFO Suresh Senapati retires after nearly 35 years. Jatin Dalal to take over.
Axis Bank reports a good set of numbers for the third quarter. Net interest income and profits meet street estimates. Asset quality shows signs of improvement.
If there is a positive proposal comes from that airlines, we are willing to extend help to the best of our abilities and possibilities within the federal structure of our government.
Hope is in the air for SpiceJet. Minister of State for Aviation Mahesh Sharma tells CNBC TV 18 the company could be exempt from an open offer. Government sources say the revival plan could be approved as early as next week.
Tata Sons gears up to buy out entity Docomo's stake in Tata Teleservices. Sources say the group has pledged shares in companies like TCS, Tata Steel and Tata Motors to mop up around 3,500 crores. That's an exclusive.
Regulatory advantage which a P-note holder was having by having lesser scrutiny,
yes,
that has gone away.
That has gone away.
SEBI chief UK Sinha speak exclusively to CNBC TV 18 about killing the regulatory arbitrage between P-notes and foreign portfolio investors. That exclusive coming up.
Crude prices bounce back after the International Energy Agency says tide is set to turn. Brent near $50 a barrel. European markets perk up. Wall Street on a tight leash.
Bulls maintain the momentum on the Lal Street. Markets consolidate after yesterday's bumper rally. The Nifty reconquers the 8,500 mark.
The excise duty on diesel has been hiked by 2 rupees a litre, and I believe it would have been hiked on petrol as well. As of now, what we're reading is on diesel that the excise duty hike has been there by about 2 rupees a litre.
This doesn't make sense. We are paying the highest prices in the world for diesel and petrol, and that's after the excise duty hikes.
In India, nothing comes from foreign countries to the pipeline.
Losses and gains. No, they don't buy today and produce tomorrow. They also
but their turnaround time may be same. Like we are pricing the petrol price would be based on last fortnight. That would be the turnaround for foreign refineries, etc. In India, it's not that.
Petrol and diesel prices haven't cut. IOC has cut petrol price by 2.42 rupees per litre.
Instead of raising diesel prices for the consumers, what the government plans to do is to keep cutting the excise duty. Sources indicating that enough of a cushion is now being created till crude prices reach $70 a barrel.
Well, petrol and diesel prices have become cheaper, but not before yet another excise duty hike. And this is the 4th time in 3 months that the government has hiked the duty to bolster its coffers. Good evening. Thanks very much for joining us on India Business Hour. Nantara, it's a balancing act. Let's be clear. The government needs to mop up revenues. It's doing that by hiking excise duties. OMCs have some cushion. We don't know exactly what that is. And consumers have benefited, though not to the extent that we could have if there hadn't been an excise duty hike.
That's right. It is a balancing act, but you've got to say it is tilting against the consumer at the moment. Not when you have crude languishing at like less than $40, $50 a barrel. Should you be paying what you were paying at $70 a barrel? That is what I'm saying. The big question to which the nation is demanding an answer: will oil companies still make profits even after duty hike and the price cut? Is the consumer getting a raw deal? That is, of course, going to be something we'll focus on tonight.
All right, before that, here's a quick snapshot of the day's trading action. Bulls continuing to maintain their momentum on the Lal Street after yesterday's bumper rally. The Sensex added nearly 50 points, sitting comfortably above the 28,000 mark. The Nifty paring losses in late trade to conquer the 8,500 mark. Mid-caps managing to outperform the blue chips marginally, with the mid-cap index gaining over 0.5%. Now, as we've been talking about it, the much-awaited cut in petrol and diesel prices has finally come in. Oil marketing companies have cut petrol prices by 2 rupees and 40 paise a litre, while diesel prices have been cut by 2 rupees and 25 paise per litre. But for a while there, it looked like the government may have dashed any hope that oil companies would pass on the fall in global oil prices to the consumer. In a move that felt like it was putting its own fiscal math ahead of the consumer, the government has hiked excise duty on petrol and diesel by 2 rupees a litre. This is the fourth hike in duties on fuel in 3 months. You know, Nantara, this is what we were talking about. We were waiting for the petrol price and the diesel price cut. It had to happen because of the way that global crude prices have fallen. The fortnightly revision happens on the 15th. There was no cut, and then you heard from the oil minister saying it will redone it at an appropriate time. The appropriate time meant that the government was calculating the excise duty and how much it would take away from oil marketing companies, and then oil marketing companies had to decide how much they could give to the consumer and perhaps keep some for themselves as well.
That's right. So basically what we had picked up and we had reported yesterday on CNBC TV 18 was that you were looking at a cushion of 5 to 7 rupees. So the exchequer going ahead, skimming away 2 rupees a litre as far as that excise duty hike goes. Sources also indicating that the exchequer stands to gain about 4,000 crore rupees from this exercise. And that makes you wonder just how daunting it is going to be to meet that 4.1% fiscal deficit if that is being taken away at the cost of the consumer. So oil marketing companies keeping a little bit for themselves, maybe about 1 to 2 rupees a litre. Their logic is that we have high crude inventory losses. We bought crude when it was much higher, perhaps in the month of June when it was around $120 a barrel. So that's what they're trying to offset the losses for. Meanwhile, the consumer paying pretty much what they were paying when crude was around $70 a barrel. But that story aside, there is a need for transparency because now you have a situation where IOC, BPCL, HPCL have about 99% of the market share, about 99% of the market share. They have the exact same over recovery or otherwise the exact same under recovery. There is no competition. If there was competition at play, maybe we would have, somebody would decide, okay, I'd rather cut prices, I'd rather not cut prices, but, at least there's competition at play. The other thing that requires transparency in the oil and gas sector at the moment quite urgently, and that is the subsidy burden. What about ONGC? What about Oil India? You have crude prices languishing around $45, $48 a barrel, and we don't know how much they're going to have to pay in the third quarter. That has not come out as yet, and maybe in the fourth quarter they'll be totally exempt because then, they'll be in negative territory if they were to give anything at all.
Absolutely. So we're not arguing with the government's right to hike excise duties. What we're arguing about is the uncertainty and the lack of clarity on what and how this pricing is being arrived at. You spoke about the subsidy sharing mechanism. It's been 7 months and we're still waiting for the government to put forward what its plan is as far as the subsidy sharing mechanism is concerned. And our conversation with the Minister of State for Finance yesterday revealed that they haven't been able to arrive at a breakthrough just as yet. So there are several unanswered questions, but at this point in time, it's a balancing act. Give a little bit to the consumer, leave a little bit with the oil marketing companies, and take a little bit for yourself. So listen in to a diverse range of voices that we spoke to on the government's decision to hike excise duty for a fourth time and also pass on some benefits to the consumer.
I would like to say something in defense of these companies, the refinery companies, because they are losing heavily in terms of the inventory losses. They have purchased crude at higher prices and with the time gap selling the product at cheaper prices, they incur heavy inventory losses. So they have to keep some upside with them also to balance that.
There may still be some over-recovery, I don't deny that. But don't forget that oil companies need to have their own fiscal conditions sound so that they can invest, they can service the consumer in the future. They have large projects on hand. For all that, they need money. If they have suffered in the past and they are making a little more money now, what's wrong in that?
The oil companies have to hold large inventories, and the sudden, the inventory value loss takes place. So one should not go by arithmetical working of what drop has happened and whether the entire drop has to be transferred.
Well, it's a balancing act, but as we've been pointing out, there is time for the government to come out and clarify what its position is going to be, ostensibly in a decontrolled environment when it comes to pricing. Now, it was a big day in the corporate earnings calendar. Reliance Industries has met street expectations with its third quarter performance. Net profit down an expected 4.5% to 5,250 crore rupees, despite gross refining margins coming in at a disappointing $7.3 per barrel against $8.3 in the previous quarter. Net sales slipping to 93,050 crores from 1.09 lakh crore rupees in the previous quarter. Anuj joins us now to take us through the numbers. Anuj, not looking good there for Reliance, even though the numbers are along expected lines.
Well, Reliance came out with numbers which met street expectations, but if you look at the internals of the numbers, they were not really very convincing, because the gross refining margin fell to $7.3 per barrel. The expectation was that 7.5 should be maintained, or even it could go up to $8. That never happened. It went to $7.3, and what that meant was that the refining EBIT was actually 3,200 crore compared to 3,800 crore last quarter, and even lower than the expectation of 3,350 crore. What helped the Reliance was that Petchem did better than expectation. From 2,400 crore, it came down to 2,200 crore, but the expectation was that the drop would be to 2,050 crore. Oil and gas on a small base also managed to do relatively better. Other income also went up quarter on quarter. That's also something which is not really an operational number. So other income went up to 2,400 crore versus 2,100 crore. So suffice to say, it's a mixed bag for Reliance. Petchem has been the savior apart from other income, but refining was something that the market would be a bit disappointed. But of course, there was some inventory loss, because of which you would have seen this kind of number. But overall numbers, a mixed bag for Reliance. The Reliance stock normally does not react too violently to numbers, so it will be interesting to see what kind of reaction we have on Monday morning. But suffice to say that it should not move the stock too much, because it was a bit of a mixed bag. Standard disclaimer, of course, applies, and that's flashing on your screen right now.
The things that we did to make sure that the impact of falling crude prices was mitigated to some extent, we really work closely with our buyers to make sure that we could, particularly our term buyers, to make sure that we could place our product well, and work constructively with suppliers of crude who were supplying into a very long and soft market.
It is a little bit disappointing, because I think we are assuming estimates of around 7.5, 7.6. So yes, marginal disappointments on GRMs, but it was expected, as I was mentioning. I think the naphtha cracks had actually got beaten down, and the light heavy distillate spreads had also come down significantly. So I think the inventory losses that you're probably looking at is because of lower GRMs. But again, I think the Petchem is one which we were expecting to bail out Reliance. It has also done that this quarter again.
Certainly, I think the numbers are little comfortable, better than little expectations. On the GRM front, I think though the expectation was that on the gasoline and the diesel side, I think the cracks would probably give better performance. But the fact is that I think on the other side, the naphtha has probably I think pulled it down. I think to a certain extent, it looks like.
Well, reactions there coming into Reliance, but let's continue with earnings season. In the IT space, Wipro came out with its Q3 numbers today, and it beat street expectations. IT service revenue at $1,796 billion. That was ahead of estimates. The revenue growth figure was also better than Wipro's peers. Not only that, Wipro's Q4 revenue growth guidance was also on expected lines at between 1 to 3%. Rima joins us now with more on Wipro's results. Rima, take us through the key highlights.
Well, Wipro has come out with a very good set of earnings, beating street expectations, particularly on the growth front. So the company has delivered a dollar revenue growth of 1.3%, higher than Infosys as well as TCS. The constant currency growth is much better than peers. Constant currency growth for Wipro stands at about 3.7%, beating Infosys at 2.6% and significantly higher than TCS's 2.5%. These numbers are much higher than street expectations. Margins have come in at 21.8% versus about 22% on a sequential basis, but that would be largely in line with street expectations. The utilization has dipped a tad bit, plus there is a higher contribution of on-site, so that could have impacted the margins this quarter. The company has guided for a Q4 dollar revenue growth of 1 to 3%. That seems largely in line line with what the street was anticipating. And plus, what's positive in this quarter is that it seems a broad-based performance. In the past, for Wipro, there have been a few verticals which have done well, but a few verticals, the performance has been muted. But this quarter, in constant currency, all the verticals have actually delivered a positive growth. It's only in reported currency that energy vertical is showing you a bit of a degrowth, but that could also be on the back of, the lower spending in energy because of the crude price decline. So some clarity, on the way forward from the Wipro management will be keenly awaited. But, and even if you see it in geography terms, in constant currency, America has done well, Europe has done well. So it's a more broad-based performance, and Q4 guidance seems in line with what the street was anticipating. So overall, solid set of earnings from Wipro, and you could expect the stock to do well in Monday's trade.
All right, Rima, thanks very much. We'll get answers to the questions that you've raised when the Wipro management joins us in a short bit. But this strong set of numbers is not the only big news from the IT giant. Winds of change blowing through the company's top management. The company has said that after 3 decades at the firm, CFO Suresh Senapati will retire on the 15th of March. Senior Vice President Jatin Dalal will step into his shoes as the new CFO effective the 1st of April. Now, dream runs don't continue for too long. After reporting stellar numbers over the last 6 quarters, Q2 and now Q3 have been tough on TCS. Brokerages have given TCS's third quarter a thumbs down, which hit the stock. Talking to CNBC TV 18 earlier today, the TCS management says it expects revenue headwinds in some sectors. However, the company remains optimistic about its outlook for FY16.
Our optimism going into last year was based on the fact that it's a new technology, it's a technology refresh. There are projects on the ground, people are starting doing pilots, and we had expected that they will scale it up and ramp it up. It didn't quite pan out as well as we had thought. We are in the same situation. We think, the technology choice is a given now. There is no going back that this is the new technology. The question is, how rapidly will the re-architecture investments come?
Right.
How rapidly will people actually spend money to refresh? Clients are in a very good position to spend money. Balance sheets are good, P&L is good, overall economy with a 4% growth, 3.9% growth in US is very good. But will the spend decision come is the question. If it comes, we are very well poised to participate in it.
The retail, financial services industry, life sciences, manufacturing, high-tech, as I highlighted in the call last night,
yes.
All of these things are showing a very good momentum. We at this point in time see a couple of headwinds. One is the diligent business because the books are running off. So we will have a revenue headwind in that business. The second one is the energy business.
Right.
Because of the oil where it is today, it has actually gotten worse than when we started this quarter in Q3.
Well, that's the TCS management, a muted quarter there for the company, and that has disappointed investors. Now, SEBI Chief UK Sinha won the 2014 India Business Leader Award for his contribution to the cause of the Indian economy. In an exclusive conversation with CNBC TV 18's Melika Doshi, the SEBI Chief speaks about the recent actions taken to enhance regulation of overseas derivative instruments equal to the rules that apply to foreign portfolio investors. Listen in.
Are you attempting to blunt the P-note instrument? Because the new requirements that you've imposed on the ODI.
The answer is yes.
Yes, you are attempting to blunt it.
The answer is yes. And I began by saying that this is what was the intention behind the committee which I chaired in 2010.
Okay, so sorry.
Yes.
So I'm just trying to sort of make it very clear in my head that SEBI is now saying there will be a level playing field, and that we don't want we don't want any regulatory advantages that apply to P-notes, for P-notes to be more attractive.
The right way to understand it is that a P-note holder, the regulatory advantage which a P-note holder was having by having lesser scrutiny, that has gone away.
That has gone away.
That has gone away. So I'm not encouraging P-note. In fact, I want them to come through the direct registration.
Exactly my point, sir. Are you disappointed that we haven't seen more primary market activity, even though the secondary market has done such big gains through the course of 2014, record-making gains?
Yes. SEBI was expecting that the primary market will revive. There will be more demand for raising capital. I think I have quoted this number in the past also. 4-year period ending 2013, 84,000 crores worth of draft red herring prospectus was filed in SEBI, and people either withdrew it midway or they allowed it to lapse. So we were hoping that now companies or corporates will start raising fresh capital. I am not seeing that happening so far.
Why do you think that is the case, sir?
So they have no issues with SEBI procedures. I think the corporates are waiting for some of the stalled projects to start. They are waiting for some visible decisions from the government which will incentivize them to put their money into the projects. They are still a little hesitant in putting money. Maybe, for example, if the coal auction, which is going to happen next month and in March, if that coal auction goes through very well, without any problem either with the vigilance authorities or with the courts, if some of the measures which have been announced through the ordinance in the land acquisition bill, if those are taken to their logical, and by that I mean they are passed by the parliament, then corporate India will start making investment. Investments are not taking place, and because investments are not taking place, primary market is not getting.
But exits are taking place, sir. Private equity wants to exit. Certain investors that have run through the course of 6-7 year holding periods want to exit. Ideally, the IPO market should be driven by that as well. Ideally, a robust and a rising secondary market always creates, a pipeline in the IPO market. This time that's not happened.
You are talking of half a reason. It's not a full reason. If you are a promoter and the private equity investor in your company is pressing you, you will perhaps be able to stall it for some more time.
You're saying that it's a matter of time?
It's a matter of time.
Matter of time for the primary markets revive. That's UK Sina, that's SEBI chief. Up next on India Business Hour, Minister of State for Aviation Mahesh Sharma tells CNBC TV 18 that SpiceJet could be exempt from making an open offer, or Ajay Singh could be exempt from making an open offer for SpiceJet. Details on the other side.